Welcome to a new episode of Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. Like I always say, this is the podcast that will make you a better investor and a better leader. Before we get to our big interview for this particular episode, have to hit on some stocks of the day. Let's fire that countdown clock. I have 1 minute. I'm looking at the sell-offs in Robinhood, MicroStrategy, and Coinbase, otherwise known as really some top crypto stocks. Seeing a sell the news moment here after President Trump signed or put into effect that strategic Bitcoin reserve. I really have to say the sell-off to me seems a bit overdone. I know we're seeing pressure on crypto, but I see that news on the Bitcoin reserve. I see that as validating the Bitcoin space. That is good for a company like MicroStrategy. This company has invested over $33 billion in Bitcoin. Michael Saylor really making that push there too as well. 25 seconds left. First time debuting the countdown clock. It really adds a sense of urgency to it. And then also, of course, as crypto potentially becomes more mainstream after this event, that could lead better trading activity at the likes of Coinbase, like Robinhood, middle of this year into end of the year. So that will benefit those platforms. Again, you're seeing some really big sell-offs here over the past month and week to date or over the past few weeks for those crypto names. And I'm out of time. Countdown clock debut for Opening Bid. All right, let's bring in our featured interview of the day, not crypto related. Newell Brands CEO Chris Peterson. Chris, good to see you. It has been a while since we have connected. This is your first podcast, right?
My first podcast. It's great to be with you, Brian.
Yeah, well, it's good to have it on Yahoo Finance. You know, I think people go to the stores, Target, Walmart, Costco, and they see Rubbermaid, and they think that's the only thing you do. For those not familiar, how many brands are in the portfolio today? What else are you making besides that Rubbermaid? Those Rubbermaid containers that we all use to stock our food up in our refrigerator, and hopefully it lasts for 20 extra days.
We have a portfolio of about 50 brands, but the biggest brands include brands like Graco, which obviously makes car seats, writing brands like Sharpie and Papermate and Expo and Dymo. Rubbermaid, of course, as you mentioned, is a great food storage brand, but also a great commercial products brand. You see Rubbermaid commercial products containers in hotels and airports and the like. We make Yankee Candle, and we make Coleman Outdoor are some of our larger brands.
What within this giant portfolio, outside of Rubbermaid, what's growing the fastest and why?
I think our writing business right now is growing the fastest. We've had great success with Sharpie. Sharpie is known as a permanent marker, and it's a beloved brand, and we have great market share. But we've extended the brand into gel pens and most recently into creative markers. And so as we're entering new categories, we're driving growth on that brand and on that business.
What's a creative marker?
Creative marker is like a paint marker. So think about it as if you're trying to be a creative enthusiast and create some artwork, and you want something that can go onto multiple surfaces without smearing off. That's what a paint marker is. We just entered the category last year with a line of creative markers. We went from 0% market share to 35% market share. And this year, we're expanding based on the strong launch last year with new colors and fine tip point sizes, because we heard from the creative enthusiasts that love the paint markers that they wanted more from us. And so we're bringing more this year.
I think I need a bunch of those, Chris, for my next whiteboard session with the team. I mean, those things get pretty messy. But I remember covering Newell 10 years ago, like when I was still coming up in my career. And one of the first thoughts that we had at the time, well, everybody's going to be writing on like tablets. I mean, I'm holding my phone here. We're going to be writing on tablets, and the pen business was going to go away. Why do you think that hasn't happened yet?
Well, I think there's a couple of things. Number one, a lot of people really enjoy still the physical act of writing with a pen on a piece of paper. And it turns out that for education, we've got a lot of data that would suggest that if children write with writing instruments, they retain more knowledge than if they type on a computer. And so we think there's a place for both.
It's good. I remember writing in cursive. Remember that, Chris? Remember that was actually taught in school? I don't even think that's taught anymore. Actually, I don't think I could write anything in cursive outside of my signature, which is it's just sad. But I guess it's a sign of the times. One business I did. I mean, I thought your Graco business would be doing a lot better. Not that it's bad, but I mean, during the pandemic, I mean, there was a baby boom. I mean, don't we all need car seats?
We do, and the Graco business is doing very well as well. So we are the market leader in car seats in the U.S. Importantly, we've just extended this past year. We launched a product called the Smart Sense Bassinet and Swing. And this gets back to our strategy of trying to drive innovation. So what this Smart Sense Bassinet and Swing does is it listens for when baby is crying. And when the baby is crying, it actually starts to play different music and different motion to put the baby back to sleep. It is a game-changing product for parents. We've just launched it. It's at the end of last year. It's off to a great start. It's priced at about $400. And so we're extending that Graco franchise from just the car seat business into other categories. So we're excited about that brand as well.
You make those for adults, Chris?
Exactly.
We could
I've been tempted to go in.
Yeah, maybe. But look, how do you come up with some of these things, like creative pens, those baby products that do that? I mean, how does the team come up with it?
So effectively what we did was in 2023, when I became the CEO of the company, we did a sort of a capability assessment to look at what's required to win in consumer products. And we determined, we came out with a new strategy that was based on deep consumer understanding, brand building, and new product innovation as some of the key capabilities that we wanted to build. So to your question, what we now do is we send our teams to look at how parents are using the products, what are the pain points, articulated and unarticulated, and those teams that are watching how people are using products evaluate and come up with ideas that they then feedback and get consumer feedback on. And we have enough technology inside the company that we can then bring technology to bear to solve those pain points. We're not solving the cure for cancer, but we're trying to make life better every day for consumers with our brands and products.
What's the Coleman cooler business up to? I mention this because there's a lot of competition in this space. It's been another year of, I would say, I know they're a competitor, but Stanley mugs. I mean, I see these things all over the place in the gym.
Yep.
Yeti's still out there doing its thing. What's the state of that business for you?
Yeah, the Coleman business is a turnaround for us. So we declared it a turnaround. We brought in a completely new management team about a year and a half ago. We've got great innovation in our pipeline that I think is going to be game-changing for the cooler business specifically. That innovation is slated to launch at the beginning of 2026. So we're about 12 months away from unveiling it. We've just started to review it with customers, and it's pretty cool. Some of the stuff we've got in our pipeline. So we think we're onto something there. We think you're going to see more from us. In the meantime, we've just signed Kane Brown as an influencer on the Coleman business. So you'll see us begin to activate more socially. We launched a Coleman Pro cooler, which is out in the market now, which is sort of the first step of reinvigorating that line. The other thing I would say about our Coleman cooler line is we make all of our Coleman coolers in Wichita, Kansas. So we are advantaged in the sense that our coolers are made in the USA. And I'm sure we'll get into the tariff discussion at some point, but that's one of the categories that we could potentially be a beneficiary of.
Yeah, no, I wanted to leave a good chunk of time for that because I think even your background is really, I mean, you were the former CFO, so you know the numbers, you know the supply chains. But how do you reinvent coolers? What else can a cooler do?
There's a lot of things that a cooler can do that you would be surprised at. As an example, one of the things we do is we go and watch how people use coolers. So think about where do you store it at your house? How do you get it from your house to wherever you're going with it? How do you then use it while you're there? And then how does it return to your house? In that whole cycle, there are a lot of things we can do to make the experience better. And so there are features and benefits we can add to the cooler. There's transportation of the cooler, storage of the cooler that we can make better. So I'm not going to go too far out, but you get the idea that we've taken a pretty broad look at the user experience, and I think we've got a line of 3 or 4 new to the world coolers that we're going to come out with next year. So I'll be happy to talk to you about them the next time we're on the podcast together.
Well, is one of these cooler's just going to come with an assistant from Rubbermaid? Because my cooler is heavy as hell, and I end up leaving it in my car. I mean, I would just want somebody to take it out of my car. You know, it's not too much to ask. I mean, I'm willing to pay for it. You know, it's recurring revenue for you guys, Chris.
Yeah, we've got an answer for that.
All right. I will stay tuned. And you know, let's get into some of this tariff discussion because I think you have a fascinating story here as a company and as a leader that not many people appreciate, and maybe even investors don't appreciate. You were CFO, if I'm right, at Newell during the last Trump administration. How has this been different? First, is that correct? I just want to make sure I have the dates right.
I just started right at the end of the Trump administration,
Gotcha.
but yes, I can talk about that.
So how is this time different compared to when you were just getting going there at Newell as CFO, working through the numbers? A lot of executives I talk to are already starting to call out a lot of differences.
Yeah, there's a lot of differences. I think this administration is moving with a much greater speed this time around in the second administration than the Trump administration and the first administration. The other thing I would say is that the trade and tariff policy is different. So in the first Trump administration, there were tariffs put on China that Trump put on, but he also went through a process where there was an exclusion process and the ability for companies to go and petition to have certain product categories exempted so that the tariffs were applied more selectively as opposed to universally. In this administration, there's a different focus, I think, on the tariff discussion, where the administration is looking at trade imbalances and trying to use tariffs against many different companies in a more universal fashion. And so that has created, at least in the short term, a lot more uncertainty. And the situation is much more dynamic because it seems to change, almost every day based on the negotiation that's happening out in the open between countries.
Chris, if you were talking to the president right now this morning instead of myself, I know both distinguished guests in your view, what would you tell him about these tariffs?
I would tell him that I think tariffs play an important role. I'm not against tariffs. I think tariffs are better applied selectively for strategic categories than universally, is my personal point of view. And I think there are critical industries that are important to rebuild in the U.S., and I think there are other industries that may be less important to rebuild in the U.S.
All right, hang with us, Chris. We're going to go off for a quick break. We'll be right back on Opening Bid.
Thank you.
All right, welcome back to Opening Bid. Having a great chat here with Newell brand CEO Chris Peterson. Of course, you know this company's products from Sharpie pens, Graco baby products, and of course, Rubbermaid. Those Rubbermaid products you see right when you walk into a Target or Walmart store. So, Chris, we're talking about tariffs. So, how much of your supply chain is your merchandise made in China, Canada, and Mexico?
Yeah, so we are the majority of we are a global business. About 60% of our business that we sell is sold in the U.S. If you look at that U.S. business, the majority of the business we sell in the U.S. we manufacture in the U.S. in our own manufacturing plants. So about 55 to 60% of our U.S. business is made in the USA. We have 15 large manufacturing plants here. The balance of the business we source from a variety of countries around the world. China specifically is the largest country that we source products from outside the U.S. And China represents about 15% of our global cost of goods sold today. And we've been working to decouple from China and move production out of China. We expect to get down to about 10% by the end of this year. Mexico, we have 2 manufacturing plants in Mexico. They largely supply Latin America, but they also supply about 5% of the U.S. business, and we don't manufacture anything really in Canada. So we are exposed to China and Mexico, though.
Would these tariffs make you consider closing Mexico plants, or you need those?
Possibly. One of the plants is a large blender plant that largely supplies Latin America and supplies a little bit to the U.S. So that plant, it's unlikely we would close. The other plant is a small volume writing plant that we have in Mexicali. Our maiden writing plant, which is where we produce our high velocity products, is in Tennessee, in Maryville, Tennessee. So depending on if the tariffs are sustainable, we may choose to move that Mexicali business into the Tennessee plant, but we're going to take a wait and see because we don't want to, this is a pretty big endeavor to move a manufacturing plant. So we want to see what the outcome is and before we make a decision on that.
I really like, Chris, CFOs that ultimately become CEOs, because it's like you know the numbers, you know the supply chains, you know the business, and now you're in this leadership position. You can tell, just listening to you. So for a Rubbermaid bowl that I go buy from Target or Walmart, just a standard bowl, whatever it is, what does a tariff do to the price of that?
So we're excited about that one, and I'm glad you picked it. So we make all of our Rubbermaid food storage is made in Ohio. So there is zero impact to us from tariffs on the Rubbermaid food storage business. And this is another one where we've got a great innovation slated to come this year. So we're coming out with what we're calling an easy store lid line of Rubbermaid food storage products. And so, when you go into your pantry, oftentimes you'll see like a jumble in the pantry of storage products. This is meant to solve that problem. We are coming out with a line that nests nicely in the storage pantry, so that when you buy a line of storage products, it actually looks great in the pantry as well. And so that new line is coming this summer. We're excited about it. We've had strong traction. We will not be impacted by tariffs. Interestingly, on that category, much of our competitors are manufactured outside the U.S. and many in China. And so we believe in that category we are a beneficiary, because as the tariffs go into effect, our competitors are going to have to raise price and we are not. So we're going to try to go for market share in that category because we think we have a competitive advantage with our U.S. manufacturing footprint.
An important stat that I grabbed off your last earnings call, I think I have it right, hopefully I do. Newell has invested $2 billion in U.S. manufacturing since the 2017 tax cuts. I mean, that's a huge number. But to your point, your competitors may not have that. So basically, you see higher prices for competing bowls. What do you think that does to the low-income consumer that has been hit over the head with inflation the past 4 years?
Yeah, I think that's going to be tough for the low-income consumer. And so, frankly, we've looked at our situation, and if our competitors take pricing, we could choose to take our prices up. We've chosen that we're not going to do that. We think instead what it does is it makes our brand, which is already a terrific value to consumers, it makes it an even stronger value to consumers. And our pitch to the retailers has been, you should discontinue the brands that are going to be effectively priced out of the market and shift your merchandising and your shelf space to our brands that are made in the USA.
Do you see retailers, not that they don't, but at least maybe this spring or this summer, advertising more made in the USA products? And then for those products that can't carry that brand, are they just going to get taken off the shelves?
Well, it's still a little bit early to see. We are pushing hard on that, as you can imagine, because on the part of our business that's made in the U.S., we are on our front foot saying, hey, we think that our brands that are made in the U.S., which are not subject to tariff risk, have a real opportunity to grow market share and grow revenue. At the same time, we've got a part of our portfolio that I talked about that's coming from China and Mexico, where we could be subject to tariffs. And so we're playing sort of both sides of this a little bit. But I do believe that we're going to get some traction, and on the brands made in the U.S., you're going to see consumers choose our brands more often than not. We also, on the brands that we make in the U.S. in our U.S. manufacturing plants, we are pivoting now to put "Made in the USA" labeling on our package, and you'll start to see that show up on our packaging over the next 3 to 6 months.
Chris, in the few remaining minutes that we have, we always like to ask our guests for a hot take. The discussion right now happening with a lot of leaders is concern about a recession. Are you concerned about a potential for a recession this year?
Yeah, I don't see a recession. I think there's a lot of volatility in the market right now because of the uncertainty of tax, trade, and tariff policy. But I believe a lot of that uncertainty will be resolved over the next, call it 6 months. And as that uncertainty gets resolved, I think it will allow businesses to deploy capital in a more certain environment. So we're obviously watching it closely. The low-income consumer, as you rightly say, remains under significant pressure because the cumulative effect of inflation over the last several years has outpaced wage growth. But the middle and high-income consumer is still in very good shape. They continue to see very strong balance sheets from home price appreciation, from equity market appreciation, and we're seeing those consumers continue to spend on our categories.
And Chris, they're primed and ready for a new $800 Coleman cooler. I mean, that's just, maybe it's not $800, but we'll, as they say in corporate America, we'll circle back. Newell Brand CEO Chris Peterson, always nice to see you. We'll talk to you soon and appreciate you coming on the podcast.
Very good. Great to be with you, Brian.
All right, thanks so much. And that's it for the latest episode of Opening Bid. Hit us with those thumbs up on YouTube and all those positive ratings on Spotify, Amazon Music, and Apple. We appreciate all the responses. I tried to answer them all. Also, you can hit me up at Twitter at Brian Sozzi. I carry on these Opening Bid episode discussions on to X. I meant to say X, not Twitter. That's it for the latest episode of Opening Bid.